All right. Today we'll look at the indices and I'll talk about what you should be paying attention to this week. And overall, I think it's a very simple market. All you need to do is have a lot of patience here. And today's SPY was up 0.68%. And the number one thing I want you to pay attention to is after we had that big selling day on Friday, we were right above a rising 20 daily moving average. And it was really a question of whether or not the sellers were going to take control with these lower highs and we were going to start down for another lower low. And anytime you're in that situation, you always want to pay attention to the current trend and price. And today what price did is it gapped up above that rising 20 daily moving average. And at the end of the day, the price closed above every single moving average and they are all still positively sloping. So this is a failure for the sellers or the bears, whatever you want to call them, to send price lower. The buyers bought it right back up and we are still in a bull trend. And while there are no guarantees in the stock market, the bull trend always favors that price is going to try to go higher here, which means we are going to need to see price break that high. That high is just above 608, and then above 608, we are starting to break out into all-time high territory, which means we'll have very little resistance until we get up to 616 or right around 624. Now, if anything comes up and price starts to break support, then and only then would I be looking for lower prices, because that would tell us that the bull trend is no longer here. Price will start to break through support. We'll come down and make a lower low rejection from all of these lower highs. And then in that scenario, we're looking for at least 585. 585 is a lot more likely if SPY starts breaking down below support, which is anywhere between 594 to about 600. So when you're in this situation where you have a bull trend and there is a ton of support below the price, it is very difficult to make money shorting and being a bear. So keep that in mind. The highest probability chance is that we're going higher, which also means that is the easiest trade you can make because probability works in your favor. So I do think it's that simple. You could sit here and watch until we break out of this range and then react. But while we are in this range, there has been very profitable day trading and profitable short-term swing trading. So as always, follow price. Price is still telling us we're bullish as long as we can hold above this bull trend with price above all of the moving averages. So I would not overcomplicate it. If you disagree with the fact that we're in a bull trend, that is irrelevant because price does all of the talking around here and we only trade what the chart is telling us. We couldn't care less about somebody's opinion or some talking head telling us that we should be bearish. We only care if the chart is telling us to be bearish. And right now the chart is not telling us to be bearish, and more likely than not we're still going higher. So keep it that simple. It really is that simple. On the NASDAQ 100 triple Qs, we were up 1.21% today. And the same exact story as what I just went over with SPY. Price tried to break down on Friday. Today it failed with the gap up. Price is back above every single moving average and they're all positively sloping. And we are getting very close to a blue skies breakout. If we can start breaking above 530 to 533, then we are more than likely going straight to a price target at a brand new all-time high at 546. And if we're going to get bearish, we need price to prove it, which means we need to come down here and break down through 516 and 510. And until that happens, all odds favor the bulls to just continue to push higher until we see price tell us otherwise. So do not overcomplicate it. If you have a trade plan that is focused on following price out of this range breakout, you are going to do very well. And keep in mind, if you are a decent trader, trade the range while we're in it because it's very profitable if you're buying and selling at support and resistance. That is how you trade a range. You're not holding for long term expecting giant breakouts. You're simply enjoying the volatility within the range while we're in it. And nobody truly knows how long we're going to be in this range, but the longer we're in the range, the better, because traders that are taking advantage of the volatility are doing very well right now. And I can very easily illustrate this point. Right here is a 3-month view of the triple Qs. And in the last 3 months, the triple Qs are only up 2.64% with a ton of volatility, as you can see by these wild swings on this chart. And in that 3-month period on TSC Trade Alerts, we are trading the market. And in that same 3 months, we are up over 12.6%. And as you can see, the equity curve is very nicely moving from the bottom left of your screen to the top right. And that is what I mean by trading the range and making a profitable trading strategy while we are in the range. And then, of course, when we get a breakout of the range, we'll trade that as well. So if you want access to these trade alerts, that's my TSC Trade Alerts, which you can find out how to join in the description of this video. And we are not just crushing the market. We are absolutely obliterating the market. And we are going to continue to crush this market all year long. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.